Hello, everyone, and welcome to today's EMX Royalty webinar. Before we get started, I'd like to go over a few items so you know how to participate in today's event. We've taken a screenshot of an example of the attendee interface, and you should see something that looks like this on your own computer desktop in the upper right corner. If you've joined the presentation using your computer's speaker system by default and you would prefer to join over the telephone, just select phone call in the audio pane and the dial-in information will be displayed. You will have the opportunity to submit text questions to today's presenters by typing your questions into the question pane of the control panel. You may submit your questions at any time during the presentation, and we will collect these and address as many as possible during the Q&A sessions during today's presentation. I would now like to introduce David Cole, the CEO, President and Founder of EMX Royalty Corp, who will be moderating today's event. Dave, take it away.
Oh, thank you, Kat. Appreciate you putting this together, and thanks to everybody for showing up. Also with us today, very importantly, Isabel Belger, who is handling investor relations for us in the European theater. If you have any questions in German, be sure and send them to her, please. And then Scott Close, who's Director of Investor Relations, is also on the line here. Scott, thank you for joining us today. You're right around the corner from me here in the office. And Dr. Eric Jensen, also known as EJ, who was intimately involved in the completion of these transactions, and a long-term member of the team here, is with us and will help with respect to illuminating everybody as to the aspects of these deals. I think what I would like to do is start off with a little bit of history about EMX. I don't want to belabor that too much, but it is important with respect to how we've evolved the portfolio over time. It is unique in the royalty space, and then that plays into why and how we've executed these two transactions, and how that plays into our long-term strategy. And for those that have been listening to me talk about this for years, you'll, I believe, follow along quite nicely and understand, because you've heard me talk about what our plans are here in the future and what we're going to do with the cash that we made from the strategic investment in Russia that panned out very nicely, et cetera. So the thing that makes EMX unique in the royalty space is the fact that the bulk of the royalties within our portfolio were generated via the prospect generation business model. And we have organically grown the bulk of our royalties within our portfolio, executing that model. And as many of you know, the prospect generation business model is reliant upon economic geologic talent, which I believe we have a lot of, and we utilize that talent to go around the world, acquire prospective mineral rights, add value to those assets by building geological models, and then selling that on to an industry hungry for new discovery opportunities in exchange for cash payments, share payments, annual payments, stage gate payments, advanced royalty payments, work commitments on the ground, and always a production royalty at the end of the day. And so consequently, we have 300 and some mineral property positions worldwide, the bulk of which are royalties, and many of those are also projects that we own 100% of, which we are advancing and building those geologic models on and marketing to an industry. And I'll point out that EJ here is one of the key persons with respect to execution of that generative business model, and so that's where the bulk of our royalties come from, and that's building our pyramid. That's creating that optionality. And you hear me talk about the fact that, and other people within the industry talk about the fact that royalties are phenomenal financial instruments because of their embedded optionality, commodity price optionality, very importantly, discovery optionality, metallurgical advancement optionality, engineering advancement optionality, all of which are multiplicative and can result in some huge successes within the royalty space. And as the portfolio of royalties grow, then the portfolio effect takes over, and there's more and more chances for something to become a huge winner within that portfolio. So it behooves us to continue to grow. You can't own enough mineral rights, I like to say. So we dominantly grow our royalty portfolio, but we also buy royalties. And I believe that it's a fantastic sweet spot that the integration of buying royalties as well as growing them organically, and we're able to take advantage of both models. Most of our competitors buy royalties, particularly on the junior side, and buying royalties, because they are such phenomenal financial instruments, can be very dear. They trade at high valuations. And you've heard me say many times that, we are the value players on the block. We're keenly focused on astute allocation of capital. And I believe that many of our competitors have been playing a momentum game, which has worked out well for them. But we're the value players on the block. We're only going to buy something if it makes absolute sense for our portfolio and the long-term growth of the company. And that puts us in a situation where it's hard to buy portfolios. And I've said that I believe that when we are able to land a big deal, it's probably going to be because there are specific synergies with the seller. The seller wants exposure to EMX's equity, and the seller would like to have exposure to our generative side of our business. And that is absolutely the case with the SSR deal. We're delighted to have them coming in here. They'll be an 11 or 12% shareholder in the company after this closes here in a few weeks. And consequently, they'll get first looks at the assets that we generate around the world. They're excited about that. They were already looking at different assets that we had on the generative side, so they view that as a distinct synergy. And they also recognize that EMX is an ideal candidate for further repricing in the marketplace, and that by adding substantial cash flow at the top of the pyramid, that will be an accelerator of that repricing. So the third thing that EMX does is we make strategic investments. And I want to point out that the generative work that Eric does and other people within the company, that's our bread and butter. But that same team is identifying opportunities to buy royalties that other people don't find out about, so they're not going through a sales process. And they're also identifying strategic investment opportunities. And our strategic investing track record throughout the history of the company, 18 years now, is nothing short of fantastic. It's in excess of 40% internal rate of return on invested capital after tax. It's crazy. And that's driven, admittedly, by a couple of outsized wins, most notably, and not that long ago, was the liquidation of our substantial investment in far southeastern Russia with a huge copper gold discovery there that paid out $69 million to EMX in late 2018. And of course, the question that I've gotten at every webinar and every conference that we attend, Dave, what are you going to do with all that money, right? And people were getting impatient. And I said, well, first and foremost, we're not going to spend that money unless it makes sense. And when we do spend it, it's going to be a value bet. And we made a number of small purchases along the way, whilst we were canvassing the world and looking for the right large portfolio to buy. And I'll use the analogy that Warren Buffett says that there's no called strikes in investing. We're able to just stand at the baseball plate with our bat in hand and watch pitches go by and say, nope, or we bid on some and we're not the largest bidder. That happened many times. We had cases where we participated in sales processes where people outbid us 2 to 1. And we said, wow, they paid a lot for that. And finally, the pitch came across the center of the plate and we hit it out of the park here. And so we're very, very pleased to have this SSR transaction ongoing. And so what I would like to do is to ask Eric to give us some specifics with respect to that portfolio, as he was intimately involved in the due diligence as part of our due diligence team.
Yeah, happy to do that, Dave. Yeah, this is something that we were, as a team, our capital team and our technical people, we're very excited about. You look at the scope of this portfolio, there's 18 assets in this portfolio, and the thing that really struck us is the diversity, not only in terms of the geography, but the metal suites and the exposure to a variety of mineral deposit types. And so we see the gamut of precious metal exposure, base metal exposures, copper, there's some nickel in the portfolio. So we really like that combination of styles of mineralization, but also the geographic diversity. But not only was there geographic diversity, but it also made a lot of sense in terms of what EMX has been doing for the past quite a number of years now. We've been working in Turkey for 18 years. And so when this portfolio popped up, 2 of the flagship assets were in Turkey. This is a jurisdiction that we know very well. I happen to be in Turkey right now. I'm in central Turkey reviewing some other additional opportunities for the company. And so we don't sleep, we don't sit on our hands, and we've been looking at quite a number of range of opportunities, as David explained. This portfolio had these two Turkish assets, and we felt that we were in a unique position to really understand what the value propositions were with these two assets. And I really like what we see. I'm a firm believer that I like large VMS camps and deposits, which is what the two flagship assets here, Gediktepe and Yeni-Pazar, represent. And in particular, Gediktepe, this is a big system. And what I like about Gediktepe, the key royalty amongst the Turkish assets, is that this is a VMS deposit, polymetallic. There's copper, lead, zinc, silver. There's some gold in this deposit, and quite a bit of gold in that in this particular system. What's nice about Gediktepe too is that the top of the deposit's oxidized, and so there's a couple millions of tons on top of the deposit that are oxidized and very gold rich. And so when they turn the switch on this deposit, they're going to produce in this oxide cap. It's going to be heap leached, and it's going to be a really nice cash generation stream for EMX in terms of its royalty. We have a 10% NSR on that oxide gold cap, which will be mined first. Following that, then they'll go into the underlying polymetallic sulfide deposit that'll produce for many years with a range of metal exposures too. We have a 2% NSR on the underlying deposit. So this one, and also this deposit, we knew that this project was in construction. And so this is going to be a near-term cash flowing asset for EMX with a great configuration. We get those nice returns in the early years. Cash flow is coming from the oxide gold cap, followed by the long-term polymetallic delivery of value to EMX's shareholders. Yeni-Pazar, very similar. We see cash flows that are front-loaded in that system as well. That's not at the development stage. They're securing their project financing, but that's a feasibility stage project with a similar resource and reserve base as we see with Gediktepe. So those two assets form the core of some of the value we see in the SSR portfolio. But what I like about it too is we have 16 other royalties in the Americas in a belt that stretches from Canada all the way down to Argentina and Chile. So there's a great deal of exposure, a wide variety of deposit types and metal exposure there. And that's really highlighted by the Diablios epithermal system in Argentina. So we secured a royalty over the Diablios system, and I'm really excited about this, as a lot of people who understand South American geology and have been watching this discovery play out over the past several years. The operator, Abra Silver, on the Diablios system, you look back at 2019, their share price was kind of a stagnant, and they were in somewhat of a doldrums. And then they started announcing these phenomenal drill results in the Diablios project. For those of you who are familiar with this, you may recall that took place, some of that started in early 2020, just before the pandemic. And so they had these remarkable press releases that came out, but it sort of was overshadowed by the global, what was happening, playing on the global stage in terms of the onset of the pandemic. But by mid-year 2020, I think that people really started paying attention to what the news releases and the story that Abra Silver was telling. Eric Sprott got involved with them. They raised a substantial amount of money. Now they're an extremely well-capitalized value creation mechanism in Argentina, and they are drilling out what looks like a really interesting, at this point, an epithermal system. But in some of the recent press releases, they've been now discussing that they've been intersecting these high-grade copper intervals that are positioned just below the silver and the gold in the epithermal system. And it looks like this could transition down to a significant porphyry copper gold system at depth as well. So there's a lot of upside in that system, and we really like the story that's coming out of the Abra Silver camp at this point. Coupled with that, there's a whole gamut of other royalty assets from anywhere from the resource stage down into more earlier stage projects. But yeah, a really diverse portfolio that matches well with what EMX is trying to accomplish at the global scale. We have a global wingspan, and this exposure in the Americas, and especially in Turkey, really complements nicely what we've been, the business models that we've been executing for quite a number of years now.
Unmuted here. Thanks very much, Eric. Appreciate that. I will review for everyone the capital structure of the purchase, because I know that's a forthcoming question that we'll get here. And it was in the press release, but just to go through that again for everyone's edification, EMX is paying $33 million in cash to SSR Mining. We are also paying $33 million in equity in EMX, which will result in about 11 or 12% on a pro forma basis of EMX being owned by SSR. And as I said previously, we're welcoming them as a shareholder and a partner moving forward. In addition to those payments which are made immediately upon close, which we expect within a few weeks, there's also delayed payments associated with the Yeni Pazar asset that Eric just described. And those payments, we're very pleased with the fact that we're allowed to make those after the project has been fully de-risked. As Eric said, we expect a lot of cash flow from Yeni Pazar, but it is a net profits interest royalty, which has greater degree of risk, and we also are uncertain about with the timeline for it to come into production. So the way that is structured is that it has to go into production, then EMX will pay $2 million in securities to SSR. Then when it goes into production, that was at construction, at production, there's another $2 million paid to them in stock. And then after the royalty has fully paid 10 million USD to EMX's account, then we pay an additional $15 million to SSR. And after it's paid an additional $10 million, 20 million total, we pay an additional $15 million. And what's great about that is that, you know, we pay 34 million, which is, if you calculated the net present value of the asset today, that's approximately what it's worth, but we don't have to pay for it until it's fully de-risked, until we've actually even received 20 million of the 34 to our coffers. So a very, very nice structure. We appreciate the fact that SSR allowed us to structure the deal in that way for that asset to be fully de-risked, and that ultimately adds up to the $100 million headline number from EMX. I will say that the question that I've gotten so often, what are you going to do with the cash that you have in your account? Well, this answers that question. This will deploy substantially most cash that we have in the account. And that is why we have put in place a $10 million facility associated with this transaction, backed by Sprott. And hats off to Sprott. We greatly appreciate their support as a capital partner. They've been a capital partner of, this is Sprott Global side of Sprott and the Rick Rule side of Sprott, but the whole organization is supported. And they've been a capital partner of ours since the very, very beginning of EMX Royalty Corporation. And that was an easy deal for us to transact on. It happened very quickly, came together very quickly, which is what we needed in order for this to work. And that $10 million facility gives us the arrows in the quiver to be able to do more deal flow. And I will say, as you've noticed in the press releases recently, deal flow begets deal flow. So that's the review of the capital side of the structure. And I will point out one important thing. Most royalty portfolios that we see for sale are back weighted with respect to cash flow. So, and that's typical of mining royalties. It takes a long time for them to develop, but long term they do extraordinarily well, or can do extraordinarily well. Most portfolios that we see marketed are that way. This is different. This is front-loaded cash flow thanks to that 10% NSR and the golden rich cap at Gediktepe. And so we're going to have a quick payback on this. I know it's frustrating to everybody on the call, and it's frustrating for us. We're not allowed to specifically state the amount of royalty income that we expect off this. I have been telling people that it will be double-digit millions of dollars per annum right out of the gate. And we expect the oxide cap to have a 3+ year mine life. So it's going to be nice, immediate cash flow to EMX. We will be able to give greater specifics and full guidance at a future date after we close these transactions and after we file the royalty 43-101 documents that are necessitated in North America. Then we can give you greater clarity. So we're walking a fine line with respect to what the lawyers tell us that we're allowed to say at this point in time. So we're going to divide the questions up into two sets so as to separate the Caserones, we call it the Caserones acquisition, and the SSR deal. So we're happy to take questions about the SSR deal. Then we're going to describe the Caserones deal and take questions about the whole rolled up opportunity thereafter. I hope that's amenable to everybody on the line.
Yeah, and Dave, just one quick point too that we should mention about the SSR portfolio. Another aspect of it that was fairly unique and very attractive to us is that not only does it have the royalty and the NSRs, the NPI at Yeni Pazar, this also came with a bunch of milestone payments and option payments that are cash payments that are coming into EMX in addition to the royalties. Right. Those aren't insubstantial. They're $18 million over the coming years. And those are collateralized by the assets themselves. And so if the companies don't deliver on those payments, not only do we, we have the royalty interest, but then suddenly we'll have the asset itself. And so they really have to make those payments to us. And so it's a really neat structure. That's over half the cash outlay that we have for this royalty portfolio will be paid back through these milestone and option payments that are coming due in the next few years. That was a key value driver for our consideration.
Key value driver within that, and that's 18 million USD for those that are interested. Mm-hmm.
Yeah, people were asking me, they say, well, those aren't guaranteed payments. I was like, yeah, but then we get the assets. So that's
correct.
That's a pretty good. Those are both good outcomes. It's a nice safety net for us.
Yeah. Mm-hmm. So I believe Scott Close was going to relay the questions to us. Scott, if you'd be so kind. It's good to keep Scott busy.
Well, let's see what we've got here.
All right, Scott, we're going to begin answering questions submitted during today's presentation. And as a reminder, please submit your questions to the control panel at the bottom of your GoToWebinar control panel.
So besides the Gedik Tepe and Yanapazar royalties, what royalty in the SSR portfolio excites you most?
I'll let Eric answer that one.
That's Diablios. That's a really nice deposit. And so, as Dave said, there's some specifics that we can't address at this point until we accommodate some of the regulatory compliance. But you can go to these companies' websites. These are all, there's good information. Almost all of these, both Gedik Tepe and Yanapazar were held by publicly traded companies up until just very recently. So there's technical reports on those that you can find on the web. And Diablios too, just go to the Arbus Silver website. But just look at the press releases that they've rolled out since January of 2020. And then look at their cross sections. They got that silver layer, they got the gold below that. Now they're drilling into this high grade copper below the precious metal horizons. It's a really neat story. I'm really impressed by what those guys are doing. And the market likes it.
On that note, I'll say that Scott Close has a list of publicly available documents that reference the assets of which we have purchased royalties on, 43-101 reports, etc. And Scott would be more than happy to forward that list to anyone interested. We are allowed to forward the list. We're just not allowed to quote the numbers in them.
It's funny, yeah.
We like to see you guys work out there. So, okay, the next question. When an investment is paid for with shares, are new shares issued, or do they come from existing shares outstanding?
That's new shares being issued from Treasury to SSR Mining Corporation, and they'll be one of our larger shareholders.
Perfect. Next question. Is the $200 million shelf registration planned to be used for these transactions?
So our shelf registration is in progress. It actually is delayed by these transactions because these are material to the company. Therefore, the document has to be updated. And so it's a bit of a catch-22, cat and mouse situation, a chicken and egg situation, where the deals have to close. We have to file the correct information, update the shelf for that shelf to be in place. But the shelf and the enhanced cash flow that will come into EMX is all part of our strategy for us to exit the junior world and become a solid mid-tier company with distinct positive cash flow, significantly enhancing our recognition within the space, enabling us to have a traditional banking facility put in place. And the overall goal is to reduce our cost of capital moving forward. And one of the key aspects of having that shelf in place is that you do not have to issue stock that has a 4-month hold on it. You can issue stock that's tradable. It's called ATM, at the market. It's play on terms with respect to an ATM machine where you go to get cash. But it's an important document to have in place. And it's all part of EMX growing up, and that facilitates us having less costly capital to grow the company as we go forward.
Next question. What is the gold versus copper versus other metals split across the entire EMX portfolio?
Yes, so that would be highly dependent upon if you're looking at actual cash flows or if you're looking at number of projects, because a lot of our projects at the base of the pyramid are early stage. But we are a little bit more weighted towards precious metals than we are base metals. I will say our long-term strategy here is to have a strong precious metal exposure, strong base metal exposure, and strong battery metal exposure. We believe those are all great places to be. We do believe in a diversified portfolio, but of course, we all love gold. Now, with respect to cash flows within the next year, because of the ongoing cash flow from the Lieu operation and the Gediktepe upper oxide zone, which is gold enriched. It's a polymetallic system at depth that's dominated by base metals, but in the upper zone, it's gold enriched, and that will last for 3+ years in the oxide zone with a 10%, I'll say that again, 10% NSR. So our top line income will be dominated by gold for the foreseeable future, or for the next few years, I should say. But the Timok royalty, that's one of the larger ongoing copper gold development stories in the world. And long term, we expect to see large copper income coming off of that project.
And
that's
what is
the royalty that we own? Yep. And then our Balya royalty. Thank you very much. EJ was just at the Balya project within the last few days, excited about what he saw there. And that's lead, zinc, silver. That will become a substantial, one of our larger cash line royalties in the portfolio, and that's lead, zinc, silver. So it's a nice diversification.
Yeah, we got a great operator there too. They're doing Esson's doing a really good job. So yeah, they're excited to see that move forward, and they've been working hard to get that into production.
And the next question is, what is the current status of the Timok project?
I believe that the mine opening ceremony is later this month. EJ, do you have any further update on that?
Yeah, we believe it's going to be in September. The latest I heard was September, but it's imminent. They're just waiting for some of the final approvals from the Serbian government, and they're ready to go forward. So, yeah. So yeah, there's no deviation from the plan as far as we're aware there.
Okay, and the next question, and we get this one a lot. What is your view on paying a dividend, and will it be monthly, quarterly, or annually?
Yeah, so we do have competitors that have started paying dividends even though they didn't have the cash flow to support a dividend. I won't name the company's name specifically, but we distinctly have been of the opinion, because we are asked this question frequently. We've discussed it at the board level numerous times. We have always been of the mindset that we will not pay a dividend until we have substantially positive, ongoing, recurring production royalty income. And then at that point in time, we will. And thanks to the advancement of Balya and Xinjiang at Timok, and now this portfolio, that will catapult us up to the point where we have substantially positive cash flow in 2022. Our objective here is to institute a small quarterly dividend that is very easily covered, thus checking the dividend paying positive cash flow boxes for EMX, which is very important to some investors and opens up more institutional investment opportunity for funds that need to see those two boxes checked.
Okay, the next question. This is an interesting one. Why would they give a 10% NSR? That's huge.
Yeah, so it had to do with the fact that the deposit was already pretty well known. And so it was part of the sales price of the asset. And because the operating margin within the oxide gold enriched cap is very high, it was a nice way for the buying, the party that consolidated the 100% Lydia, to be able to pay SSR for the value of the deposit after it had been fully de-risked. So they're saying, yeah, we're going to give you very high royalty on the upper oxide zone as a significant part of the purchase price for us to consolidate 100% of the asset. The royalty, after it gets into the lower polymetallic zone, goes to a more traditional 2% NSR. These NSRs cannot be bought out, and there is no cap.
Yeah, and that's a really critical point. Is that this was Gediktepe was discovered by a 50-50 JV between a company called Lydia, which was looking for polymetallic sulfide exposure, and a company called Alistair Gold, who was looking for gold exposure. And so when Alistair decided to convert their 50% interest into the NSRs, of course, they heavily weighted the gold side because that was what, to their benefit, that was what drove their interest in making that, participating in that discovery. So being a gold company, that's where that was weighted to our benefit now once we purchased the portfolio.
Okay. And the next question, what is the status with Rawhide? I understand production slipped while EMX doubled its interest in the asset and brought in some new Newmont expertise to assist. When can we expect to see some good results reported?
You know, it's interesting. We bought into the Rawhide asset thinking it was going to have good immediate cash flow and with not that great of long-term exploration potential. And the interesting thing is that now that we've had a chance to really dig into that district and add geologic talent to it, which was one of the synergies that we were bringing to the table there, now we see lots of long-term exploration potential on that asset. We're very excited about that. And I think that will be the catalyst for us doing very well with that strategic investment.
All right, with that, let's move on to the review of the Caserones news release.
Caserones.
And I will leave you two to address that.
So, you know, pardon me, I'll put my earbud back in so I can hear you guys. But you know, deal flow begets deal flow. You know, we've been standing at the plate trying to buy cash flowing royalties to do exactly what our strategy was to enhance the cash flow at the top of this pyramid, so we have that you know, distinct positive cash flow in addition to all the optionality within the portfolio that we've built organically. And you know, it was a very tough battle to be able to find these, and fortuitously two really good ones came across the plate at the same time, and we were able to smack them both. And we're very, very pleased to have been able to buy this royalty in partnership with Alta Strategies, and to make it a size that was appropriate for both companies and add some nice further cash flow to EMX. And this is immediate cash flow. This is a producing mine with a track record of paying pounds of copper. So they and I will say that you know, we love to own royalties on assets where our geological intelligence tells us it's going to be a very long-lived asset with a large endowment. And this is a porphyry copper molybdenum system that we believe has the opportunity to substantially grow. They haven't seen a drill hole since 2005 into this system, as they've been focused on building successfully and moving this mine into production. And when they do get around to drilling, we think the results will be excellent. It has a 19-year mine life as it sits today. However, you know, our P-mean calculation of likely mine life on this asset would be substantially more than that, 50% or more on that. And this will be an asset that will pay for many decades into the future in all probability.
Yeah,
we are paying. Yes, go ahead, EJ. Feel free to elaborate on that.
Yeah, I was just going to add some a bit of a color on the it's the setting. You know, this is in the southern tip of the Maricunga Belt in Chile. Just to the south of there, you've got some other substantial porphyries like Los Helados and Jose Maria, and then Filo del Sol down to the south. But then you have the whole Maricunga Belt up to the north. You know, Chile, if you're thinking about copper provinces in the world, you're thinking about the African copper belt, you're thinking about Chile, of course, and Arizona. These are some of the great addresses in the world. And the Chilean belt for porphyries is phenomenal. And this is right in the heart of that. This is a big asset that's going to be producing, as Dave said, for many years. GX Nippon, the operator, in November of last year, they issued a press release. They talked about this asset, and they mentioned that they are going to start focusing again on exploration to try to unlock additional potential to keep growing this system. And so there's plenty of room for that, and we're excited about what the future is going to bring for this particular asset.
Thanks for adding that, Eric. Greatly appreciated. I know the question is coming, so I'll answer it now. And that's to review the capital side of this transaction. We are paying $34 million cash for this, and to facilitate that, we are increasing our line of credit with Sprott from 10 to 44 million US dollars. And once again, thanks to Sprott for being supportive and helping this transaction occur. Great capital partner to have, and helping us grow this company. So of course, when both of these transactions close, which we expect to be imminent, then we will have $44 million in debt that is procuring with a 7% coupon rate and has a 1-year timeline. So I know the next question that's coming, and that is, how do you expect to manage that debt? And I can tell you straight up that we will manage that debt via 3 avenues. It could be any one of the 3 or any combination of the 3. And number 1 would be the sale of an asset or assets or a strategic investment that we would have on the books to pay off some of or all of that debt. Of course, we would have 1 year to be able to do that. The second option would be to have a traditional banking facility put in place. That's probably a smart option, whether we use it to pay off this debt or not. It's a smart option for us, and all senior royalty companies have those in place. It's only a matter of time before we're able to enact that, and that would facilitate us refinancing that debt if we so wanted to with a longer term payout. And then thirdly would be the sale of additional equity if and when we felt that that was appropriate. So Scott, I'm guessing that there's probably a few more questions that have come in. And you're doing a good job of relaying these questions, Scott. Thank you.
Oh, thank you. What is the timeline for additional disclosure of key assets, including 43-101 compliant reports?
Eric, would you like to answer that one?
Yeah, I've been, as you can imagine,
That's the ball, isn't
it? Heavily engaged on that end of things. That's a real scramble. Obviously, you want to get the information out as soon as we can. I can promise you that we've been working some really long hours since we made this announcement, doing exactly just that. So yeah, soon, very soon. We got a really good team working on that.
There's 2 catalysts for us being able to give greater enlightenment with respect to these transactions and their cash flow profiles. One being closing them, and the second being having the royalty 43-101 documents filed.
Yeah.
Okay.
And when we, the shelf prospectus, there's obviously going to be some responsibilities there. So yeah, we'll be pushing these out as we go forward here with the matching the appropriate deadlines.
Excellent. Next question. Will the new cash flow be used to pay down debt along with asset sales? Is a sale likely if double-digit cash flow is expected?
So certainly the cash flow that will be forthcoming from these assets will be one of the places that we can use to make payments on that debt without question. It'll be easily, in my opinion, serviceable as the payments that are on that note are substantially less than the amount of combined cash flow we expect from both of these transactions, in addition to the portfolio that we had already, particularly given the fact that Lieu and Timok are both coming into production. So we're going to be in a strong position without paying off the debt on a cash flow basis, but that doesn't mean that we won't pay off the debt. And as I said, the possibility of an asset sale certainly it is out there. We have a large security portfolio. So if you look at our long-term investments plus our short-term investments and tradable security portfolio, it accumulates up to roughly 34 million Canadian dollars.
Mm-hmm. And I know you can't answer this, but you can give them the sort of answer. What is the expected annual cash flow from the Chile royalty? Caserones.
So I do believe that Altus took a little more liberal interpretation of that, and they did put a number in their press release. That's an after-tax number. I believe our after-tax number will be slightly more than that, but rough, in round numbers, that number. So feel free to reference the Altus Strategies press release.
Excellent. Just reading this one that came in. One more on Rawhide. On the website presentation online, it says a 19.9% interest owned by EMX, but I have heard 40% mentioned by Dave recently in an interview. Is this still to close?
I believe that currently we're over 40%. We're happy to increase our ownership there. As I said, we've turned very bullish on the long-term potential of that district. Happy to have more gold exposure in Nevada.
I think that's it for right now.
Well, I just want to say to everybody out there that for all the long-term EMX shareholders that are on the line, I know there's many, that we appreciate your support over the years. And you know how hard we've been working to allocate capital astutely and pursue our value-oriented approach to growing this company. And I'm just delighted to be a participant with this team who continues to humble me. As we have moved from a generative company focused on early stage assets to a company that is more and more looking at advanced stage assets, such as the ones we've just inked, we've substantially increased our engineering and metallurgical bench strength here with very strong ex-Newmont vice presidents, and to have that on our consultancy team. And they've been instrumental here and helped us out with the due diligence and helped us be able to feel very good about the pitch that we chose to hit.
Yeah, and we're not, one of the things, we're not resting on our laurels at this point, patting ourselves in the back. I mean, we immediately have jumped into some other, just continues to look at new opportunities. That's what I'm doing right now. And the team doesn't sleep. We keep going, and we're going to keep generating value.
Okay, here's one more question that just fell in the door here. And this one's probably for Eric. What is the emphasis at present on battery metals investments?
Yeah, well, we've had quite a bit going on in Northern Europe because there's some fantastic nickel, copper, cobalt, PGE belts up there. It's a great place in the world to explore. There's quite a number of mines and historic mines in that region, some fantastic geology. So back in 2016, 2017, you may recall the nickel price had sagged. I think it was below $4 at the end of 2016, and really people didn't care much about those types of deposits, but we could see what was about to happen with the electrification of vehicle fleets and demand curves for nickel. I remember some of the pundits saying we're going to face a real problem here in about 3 to 4 years, which is really perfect timing for the construction of an exploration portfolio. So we were hard at work beginning to assemble those assets. That's a key, that part of the world's been a key focus, but we're now looking elsewhere as well. So yeah, watch for future news on that. We're going to keep doing what we do on the generative side. And that's acquire good properties, advance them to the stage where they become attractive to partnership, and find capital groups that want to support these things. And that market is ripe.
I know one question that I commonly get, Scott, that I'll throw in while you're perusing the other questions that are forthcoming, and that is, is EMX's strategy going to change moving forward? And so now we have more arrows in the quiver and more arrows coming into the quiver from enhanced cash flows. But our strategy of being dominantly focused on generative and royalty generation activities, it will remain the same. And we believe that's the most astute allocation of capital long term. But it is pouring gasoline on the fire by acquiring cash flowing royalties. And I think the sweet spot is to do both. And also continue to look for new strategic investments and augmenting those investments that we've already made, where we commonly take an activist approach and contribute engineering and geologic talent behind our money. And I think that's one of the key reasons why we've been able to achieve such high internal rates of return on invested capital over our 18-year history, is because they are activists where we're backing that money with talent. And so we're going to keep doing the same three things that we've been doing. We just have a chance to do them on a little bit larger scale.
Yeah, and the part and parcel, Dave emphasized this earlier in the preamble to our the Q&A, and that's when we have people exploring on the ground, becoming intimately familiar with these exploration jurisdictions, that leads to other opportunities in the business development side as well. We chose to focus on the SSR portfolio. Two of the assets, the flagship assets, were in Turkey. This is a jurisdiction that we're quite familiar with. And so that gave us a competitive advantage, that we were able to understand those assets in a way that probably other groups from the outside did not.
Oh, Scott, you're on mute,
No.
but I can see your mouth moving, so I know you've got an important question for us.
Well, everybody needs to learn to lip read then. So, okay, this is a question I've pondered many times myself, and this comes in from one of our colleagues in the Netherlands. What is your view on consolidation in the royalty sector? Why hasn't more of that occurred at this point?
Yeah, I think it's smart for some of these junior royalty companies to merge. I believe that Gold Royalty and Ely Gold was a good transaction for both of those sets of shareholders. Not a transaction that makes sense for EMX because it doesn't meet the value criteria, the strict value criteria that we have. We're only going to do M&A activity if it makes distinct sense with respect to our discounted cash flow analysis of those assets. But it's all about creating more shareholder value over time. And right now, we believe the most astute allocation of capital is organic growth, hands down, and then continue to look for meaningful transactions that can accelerate that growth if and when they come. And we've been patient in the past. We intend to continue to be patient.
And one more. This comes in from our shareholder in Utah. What project or asset is most likely to give an upside surprise in the portfolio?
Well, yeah.
Gotta be. Yeah.
Yeah. I don't think people realize yeah. Go ahead, EJ. You give them your opinion.
No, that's one that's a great system. We've back to our initial work back to we did back in 2005, 2006. Yeah, you could see the size potential there. It took some time to recognize that. The current operator's been hard at work doing that, but yeah, there's a nice story building there.
Okay. Next question.
But just one comment on that. That's there's something I call the supernova effect when the portfolio is reached. I think once we hit about 50 properties years ago, you started seeing these things just sort of all of a sudden you'd have an exploration success out of the part of the portfolio you didn't really expect. I just remember the hard shell skarn property we picked up for $14,000. And we staked open ground back in 2007, I think it was. David Johnson and I did that. And that was just an afterthought in the portfolio. And then South 32 discovered one of the biggest CRD deposits on the planet, right, basically overlapping onto that property. And so those things happen in the portfolio. That's this dynamic, and that's the fun part about it is, every year we sort of look at things and say, I wonder where that supernova is going to come from this time. And it's hard to predict that. It's hard to answer that question, but it's a fun one to watch. I'll tell you that.
Do you have an update that you can provide us with on South 32 on that property in Arizona?
Well, we can't say anything that's not in the public domain. But it is in the public domain that there's fat ore grade intercepts that transect onto our side of the property.
Excellent.
And
they made a big
back
bet
to this
there.
concept of supernova, supernovas within the portfolio. I one time heard David Hartwell giving a presentation to a packed room, talk about how some of the biggest successes that they've had in the portfolio came from projects he didn't even know the name of. And he was referencing the fact that discovery optionality that comes at no cost to the royalty holder, can just emanate from anywhere. And so, we have well over 300 mineral property positions in the world. There's many in that portfolio I don't know the names of. And there's all kinds of opportunity for big wins to emanate from that. And that's the portfolio effect of optionality at play.
Thank you for answering that. Okay, in the current market, it seems like a lot of these small prospect generators are undervalued. What are your thoughts on looking and acquiring small prospect generators?
Well, we're talking to them all the time. These are business models that we appreciate. We like the prospect generation business model, even though the capital markets seem that they don't. Rick Rule oftentimes point out that the traditional brokers and banking houses don't like the prospect generators because they don't need to raise much money. But they do accrete value over time and build portfolios. More than happy to talk to any of them at any point in time if they wanted to join forces with us and it made sense. But it has to meet our value criteria. That probably says it succinctly. Mm-hmm.
And here's another question that we get quite frequently that I address on a fairly continuous basis. Is Turkey a safe place to put money?
So I've worked personally in Turkey now for 25 years, and Turkey has, some challenges with respect to permitting at some point in time. There can be lags, but that's the case practically everywhere in the world. It's particularly the case in Arizona and elsewhere in the United States, where permitting timelines can be highly exacerbated for no apparent reason. That can be very frustrating. So that's just a fact of the mining business. We believe that Turkey's been a good place to invest for us for a long time, and you've probably heard me talk about this before, Scott and other folks on the line. I believe that political risk is commonly overvalued by the market, and technical risk is commonly undervalued, and that's an inefficiency that we can capture.
Yeah, right. You look at here in Turkey right now, there's, especially with the Turkish lira is extremely depressed, and so relative to metal prices, these companies are operating at very high margins. There's a lot of mining activity taking place here right now, and so we've been, David, we mentioned before, we've been here for 18 years. We understand the commercial landscape here. And there's operational risk everywhere. You look at the United States, look at Pebble and Resolution. If those things were in Turkey, would there be giant mines in those things? Yes. I bet you there would be. I think it's easier to permit mines here than it is in a lot of places.
Yep. And part of the opportunity.
It's not fortuitous that Eric's in Turkey today. By the way.
Yeah, and to explain about Turkey and the weak lira and how that plays into miners' favors, they basically pay their bills in Turkish lira and realize their sales in US dollars.
That's correct.
So that's how that plays out. Any thoughts on tin or tungsten?
So within the metal space, we get asked commonly what our thoughts are on commodity prices, and everybody, all three of us here, might have a little bit different opinion, and I'm happy if the others chime in. We're most bullish copper and nickel. And we always think you want to own as much gold as you can. Those are the three commodities that we're most interested in. Delighted to have lead and zinc exposure, delighted to have cobalt exposure, but those are the three that we like the most. We have talked about tin, we've talked about tungsten. We currently don't have many assets focused on those, but I believe Eric would like to say a few things.
Yeah, I was just kind of chuckling because we have a vast portfolio and there's always room for diversification there. And I like these sort of contrarian bets that everyone's sort of forgotten about, everyone's sleeping on. Back to the nickel concept. Back in 2016, you couldn't give away a nickel property, and we weren't giving away, we were trying to get them at that point. We said, this is a great time to accumulate these things. So I've been thinking about that class specifically, and there's room in a portfolio this large for those kind of contrarian assets.
And then circling back to Rawhide, was the original 19.9% Rawhide deal a distress sale, and was a further 20% also a distress sale?
Well, they were opportunistic on our part. I'm not sure I would go so far as to say that the seller was distressed.
Okay.
I will say that I believe that we got a better deal to purchase those equities because the fact that we're chasing it with engineering and geologic talent.
And would you also consider platinum and palladium royalties? This is easy to ask.
Yes, we would. Yes, we would. Hey, and you know what? I'm going to point. This is a chance to give a plug for Kaukua, right, EJ? So we talk about how the generative teams also generate, in addition to generating royalties, they generate opportunities to buy royalties. And this is a great example of one that did not go through a process. Palladium One's advancing a fantastic discovery at the Kaukua project in Finland. Eric Jensen and his team identified the fact that there was a prospector in Finland that had a royalty on that, and we were able to come in and scoop that up for, EJ, was it 250,000 Canadian dollars, if I'm not mistaken. And that's a 2% royalty where 1% can get bought out at any time for €1 million, leaving us with 1% in perpetuity. And that discovery has just continued to grow. it's worth multiples of what we paid for that royalty. And that's a great example. And that one is platinum, palladium, gold, copper, and nickel. Those are commodities we love.
Yeah, and I encourage people to look at the Palladium One website and just see the growth of that resource since we made that investment. And this is there's another synergy here as well. This was from a prospector who wanted to monetize this royalty because that was a longer term payout that didn't meet his immediate objectives. He wanted some money to do additional prospect generation, and so that was a win-win for both teams. And now we're in constant communication with this individual, and he's actually generated some really good projects, which we're talking to him about. So it was kind of a neat transaction that hopefully worked well for both sides. I think we're really happy with how that project's evolving. But yeah, it's a great commodity class to have exposure to, and that's one of the great, really neat stories that's taking place right now on the global scale in the palladium world.
And here's another question I get often. I'm sure you folks do too. Once again, from our friend in the Netherlands. What is your view on holding precious metals in lieu of cash in the bank?
So, yeah, we get this question a fair bit. We've had dynamic discussion at the board level with respect to what currency to hold. You could argue that gold's a currency. And we've elected to hold USD because our objectives here are to allocate those capital to acquire additional mineral properties around the world. So it's usually USD that we have to pay our bills in. It's USD that we transact purchases in, such as the one we're doing right now. So we will hold USD and or CAD for the most part and not hold metal. But we do convert those fiat currencies ultimately to mineral assets around the world as per these two transactions.
And here's an interesting question. Does EMX have the technical expertise in the geology of the extremely out of favor fossil fuels such as coal, oil, and natural gas? Given we expect near-term cash flow, would fossil fuel investment be considered?
Well, I believe that Franco-Nevada has set an excellent example in the market whereby they approximately 10 or 12% of their top line revenue comes from oil and gas. You can buy oil and gas revenue at a substantially lower cost per dollar of income than you can in the mining space. Very interestingly, Franco-Nevada has done an excellent job of taking advantage of that, creating greater degrees of freedom with respect to how they manage the portfolio, because the oil and gas cycle can be different than the mining cycle, and they can buy oil and gas when it's down. So I think that Franco has done a fantastic job and set an example. We're huge fans of Franco-Nevada. We think they're a great company to monitor and to think about with respect to how we build EMX. So I wouldn't rule out the possibility of committing the same alchemy that Franco has done by having that oil and gas revenue come in. We have no oil and gas assets on the books today, and we have no ongoing discussions to buy any oil and gas royalties. But it's not something I would rule out entirely, because I do believe the Franco example is noteworthy. With respect to our talent base, there's a number of people in the company that do have oil and gas expertise, including the new member of our board of directors, and we're very pleased to have two new members on our board of directors, Sonny Lieu, who's very sharp on the finance side and based out of Toronto, and Henrik Lundin, who's a well-known petroleum engineer that has ties to the mining industry and is based in Oslo. And certainly he would be the most experienced on the hydrocarbon side within EMX.
Okay, we're coming up against a hard end here.
Yes, we are.
So we have one quick question to answer, and this has to be pretty quick.
Yes.
Would you also consider adding streams as opposed to royalties?
Yeah, if the right stream comes around, we would. So far, all we have are royalties.
Excellent. Okay, I think that about wraps it up for our webinar today. Thank all of you for coming.
Thank you so much. EMX Royalty would like to thank the participants for attending today's EMX Royalty webinar. In the control panel, there are 2 EMX Royalty news releases. If you have not had a chance to download those, now would be the time to do so. If you have any questions, please contact Scott Close at sclose@emxroyalty.com. On behalf of EMX Royalty and our presenters, thank you for joining us today and have a great rest of your day.
Goodbye.
Like it.